Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of, actually this is the disc pad. And as you can see, we just now reached our second trade. Had a short there, boom, profit target. I believe that was $2,000. And just had a short right here, boom, profit target, $3,000 for the day. So let's a quick look at the disc pad. In live motion, coming down to 95.50. Actually, take a look at yesterday's. Let's see. There was yesterday's finish, a gain of $4,000 for the disc pad. Close of 95.50 was the case yesterday. As you can see, this was 4:16 p.m. Eastern Time on the 13th. So there's the disc pad making $4,000 yesterday. There was the final, and there you have today another $3,000. So a nice $7,000 for the 2-day gain for the disc pad. So nice little trading going on. But first thing we're going to look at here is a chart of the market. Okay, there's the market. These are our proprietary indicators. We're looking at a chart of the E-mini S&P 500 futures contract, front month in nature. That is the September. Looking at the last print of 897. Kind of a choppy day today. Just kind of taking a breather after yesterday's huge move. Excuse me. Today is Tuesday, the 13th, the 14th of July, actually. And as you can see, we've got some red bars here, but the trend is certainly to the upside. However, the first thing we notice here is a pretty strong negative momentum divergence. We'll call it negative divergence. A bit of a choppy indication here following yesterday's up move. Some divergences, slight in nature here and here. But of course, the trend remains to the upside. We have 900. On the upside, we have 895 as support, and that's where we find ourselves, really chopping back and forth between 895 and 900. Makes good for some discretionary trading gains. But as you can see, yesterday was a beautiful move. Had some red indications here on this day, which was the 8th, last Wednesday. Had that nice retrace up into the trend, total bearishness, and of course a move, substantial move to the downside. We actually did a video suggesting that I believe last week that would be the case, but we did get a nice reversal back to the upside to close mixed. Followed through a little bit in choppy action given the positive divergences amidst our underpinnings, the underlying indicators on the bullish side. And coming into Thursday, actually this was Friday, again a gap lower, come back to refill the gap, under test the key trend following measure of support resistance, and following with this negative divergence, the bearishness, the market would come lower, but again just kind of choppy. And then we come into Monday session, very impressive day, had a nice bullish gap. Looked to be a bull trap when we totally filled the gap, broke below the trend, but as you can see, a full divergence here. Let's go ahead and zoom in a little bit right there. Full divergence here, had bearishness the day prior. Sliding into some bearishness actually was the case here, but as you can see, this divergence here, positive momentum there, bullishness there, but once we got back to reclaim the trend, turned the bars green again, and certainly confirmed with price on this break above the high right here. This was yesterday, but a break above the high of 881.25, and it was off to the races. We had accelerating bullishness here, certainly a positive divergence here, full bullishness, and these two indicators right here, and the move was off to the races. So very impressive was the day yesterday, and of course, like a magnet, the market was drawn to the very key and round, if psychologically significant, level of 900. So we'll go ahead and just minimize that. And there's our master lead indicator. That's where we actually just mentioned the disc pad trade. Certainly, as you can see, negative was the case here. Market had exploded higher, and definitely was diverging here, suggesting the market, if the yellow's below the blue, definitely going to be a negative bias, and that was the case there. But what we're looking for is a chart of the cash market, and we'll go down here a little bit. We'll take a look at a few of our new day traders here in a second. But in terms of the market, there we are right at the level of 900, the very round and psychologically significant 900 level, but the official bias remains neutral. We do actually, without two higher closes above this convergence of key trend following support resistance measures, remain bearish on the market, and for all intents and purposes, remain bearish. Officially, we're neutral. We're going to wait and see how this retracement comes to play. If we can get back above, we can retest 935, 930, 935, and we get back above 950. Obviously, right back to bullish is the case. Getting some directional movement bearishness, or bullishness here, I should say. Nice little peak up. These should actually be grayed out in nature. But of course, these are still short-term bearish and intermediate-term bearish as well in terms of directional movement. The momentum picture is intermediate-term bearish now, amidst a short-term bearish bias as well, although a slight divergence, but nothing to write home about. So where's the market? We officially remain neutral after booking around 100 points, essentially from 800 to 900 on our last trade. It was essentially a scratch on the trade before that, went to neutral, and if you can remember, we had a beautiful call from 1376, officially bearish right there, down to 950, we'll call it. So that was a huge move in terms of discretionary buy. So I hope you guys are watching your videos religiously. And so where have our portfolios been? We're going to go ahead and take a look at that. Wow, the dual day trader DS right here put up an astounding $1,100 gain yesterday. Now this is a $5,000 account. You can of course trade as many as you would like. 5 of these would be $5,000 gain yesterday, almost $6,000 actually. So a huge winner in our Dow Day Trader 5.0 was responsible for the lion's share of yesterday's gain. And as you can see, the Dual Day Trader DS is leading the pack with a 46% gain. Now this is just in the first, as you can see, putting up some astounding gains. Now you can see it better. Boom, huge gains were the case there. Winner, nice long setup, beautiful short setup, little bitty stop out, and it caught a huge winner yesterday. If we go ahead and look over at the strategy runner, you can see the buy right there and the sell right there. Huge winner, the Dow Day Trader, 153 points, $765 a contract. The S&P system made 337.50. That puts the Dual Day Trader DS with a gain of 22% yesterday, and puts it in the lead with 45.8% in just the first 8 days of July. And as you can see, this is how we've been over the last 34 days. The Dual Day Trader ES, with an astounding run, still remains in the lead with 120%. The MAP DT, of course, always the venerable leading portfolio over time, 107% return over the last 34 trading days. The Dual Day Trader ES for the month of July coming in about where everyone else is, about on average 7.25%, but the Triple Threat Trader 2.0 Dual Day Trader up an astounding 46%. If you guys have any questions about any of these portfolios or want to get started with any of these portfolios, just go to the website, chat with the support team live if you have any questions, and or shoot us an email to admin@MiniAnalyst.com, and we'll be happy to get back with you as soon as possible to answer any of your questions. But that's all we have for today. Hope you've enjoyed it, and we will see you next time.